Stocks on Wall Street closed with a negative bias ahead of cues from September's jobs report later today. Asian markets are largely higher as U.S. bond yields ease from 16-year highs. The GIFT Nifty also signals a mildly higher start for the Indian market. And oil prices continue to decline. Brent falls around 2% to $84 a barrel as worries over demand outweigh the OPEC's decision to persist with output cuts. The RBI will announce its policy decision today. Respondents to a CNBC TV 18 poll expect a status quo policy with no change in the stance. The panel, however, remains split on whether the central bank will hike inflation forecasts. And as jet fuel prices soar, Indigo says it will introduce a new pricing structure which will charge passengers for fuel. Meanwhile, Bajaj Finance's board approves an 8,800 crore rupee QIP. The company will issue 15.5 lakh convertible warrants to Bajaj Finserv for a 1,200 crore rupees via a preferential issue. Hey guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you this morning. It is the final trading session of the week, but there's lots to track. We have the RBI policy decision. As far as the global markets go, also we're waiting for the jobs report. So let's take a look at the global markets ahead of that. We have Asia, which is pretty quiet right now. Most of the markets are in the green, but not too much higher. What's definitely doing well, and you know, the standout market today is the Hong Kong market. It's up around 1.5%, and it's actually only moved higher since the open. So that market is doing well. Of course, do remember that it's still, you know, on track for a negative week. It's down around 2% for the week. But today, the Hong Kong market is doing pretty well. For the rest of the Asian markets, there's not too much happening. The Taiwanese index up around 0.3%, and whichever others you look at are trading with just, you know, around 20 to 40 points in terms of a gain. The Nikkei market, by the way, has slipped a little bit ever since the open. So that is currently trading with a cut of around 35 points. Not too much in terms of what we're getting from the Asian markets. The GIFT Nifty will come up for you, and it is indicating that the start for our own markets could be a little bit higher. At least what we have for now is around a 35-point gain on the GIFT Nifty. So that's what's really going on across Asia. But let's talk about the US market now as well, because Wall Street ended Thursday's trading session lower in what's been quite a volatile week of trade so far. All the key indices, like you can see, were just a little bit lower at the end of the trading session. And the key cue to track now from the US is the monthly jobs report, which will come out later today. And this is, of course, a big cue for the market to track, as the US Fed, like we've been pointing out, has been closely focusing on the labor market, and it could sort of provide some hints on what the next policy decision could be like. So that is very important to track from the US markets. By the way, speaking of data from the US, the unemployment claims came in at 207,000. This is for the week which is just ending, and this is up just around 2,000 from the last week's figure. If you look at the forecast of what was estimated, it was around 210,000. So it has come in a little bit lower than what was expected as well. But that's what's, key to track from the U.S. markets and all of the cues as well. But let's bring you some important opinion. This comes in on the Fed's rate hike path from Jeremy Siegel, who's professor at the University of Pennsylvania, as well as Jonathan Pingle, the chief U.S. economist at UBS. Listen in.
They may have an idea what they're going to do in the next meeting. Once you start going out 6 months, 8 months, 12 months, you know, their guess is, you know, let's look and see which way the wind is going. They're just going to wait and see. If we do get a slowdown from all these factors, I think there's really no direction to go. Don't forget, we're in a political year. There's a lot of political forces. The lending, the small, the political pressure is going to be extremely great for them not to keep on raising rates. I think we saw the last one. Once the market says, you know what, the Fed is done, let's just hope they'll, loosen as appropriately. But the sigh of relief that the Fed is done, I think, is going to give this market a rally.
You could very easily put a November rate hike back on the table for the FOMC. I mean, we're expecting a 23 basis point increase in core CPI next week. But, if it comes in at, say, 0.30, which is a normal forecast error or higher, that's going to look like you've had an acceleration in core CPI from July, August to September. If that's coming along on the back of, a really solid employment report, the data-dependent FOMC is going to end up having to have that discussion about hiking again, which was their base case in the September summary of economic projections. And potentially as early as November. I mean, that's not our forecast, but you get strong enough data, and they're a data-dependent committee.
All right, that is some important global market opinion that is coming in. But let's also take a look at what's going on across the European markets. This is the close yesterday, of course, and it's, pretty flat there as well. If you look at the CAC index, it's absolutely flat. Like you can see, just 1 point higher there. The German DAX index is up around 0.2, down around 0.2%. So a little bit of a cut seen there. And like you can see, the FTSE is perhaps the best performer. It's up around 0.5%. So that's what's really going on across the global markets, and that's what we're looking at in terms of the cues. But let's talk about how all of these cues really impact us, all of the stocks that you should watch as well. We have Rima, Surbi, as well as Nigel joining us now with the trade setup this morning. Guys, a very good morning to all of you. And Rima, let me come to you first. Today is a very big day of cues, both in terms of, what's expected domestically, as well as, of course, from the global markets.
No, absolutely. So the RBI monetary policy decision will be known at 10 o'clock, and that will dictate the way, particularly the interest sensitives move in the second half of the trading session. But yesterday, just a quick recap, was a good session for our markets. Very steady. There was a little bit of a dip which took place early in the morning, but that dip below the 19,500 was quickly brought into, and the Nifty largely stayed around the 19,550 mark. The mid-caps were a bit subdued. The mid-cap index slipped from the day's high to close absolutely flat. The levels from here on the Nifty, on the way down, yesterday's intraday low, which is 19,487, will be watched as a support, and on the way up, the 50-day moving average, which stands at 19,607, will be very crucial. Other macroeconomic indicators, while US markets at an index level didn't do too much, crude prices continue to decline. That's a positive. Crude prices were down 2% on an overnight basis. They've now fallen 12% compared to the level that it was in the prior week. So 5-week lows on crude prices. The US dollar index to ease to levels of 4.75%. That's a positive. In terms of flows, well, the same story continues. The FI's net sold 1864 crore in the cash market. The DII's net bought 521 crore. But despite so much FI selling, the markets have largely been resilient, and that just shows the depth of the Indian equity market and the support that we're getting in from the DIIs and the retail investors. So all in all, it's going to be a lot about the big events lined up. RBI monetary policy today, and post markets, US markets, you'll have the jobs data for the month of September. Back to you.
Oh, absolutely. We're all watching out for those cues. Rima, thanks a lot for that. Surbi is also here to take us through the stocks that we should watch. Surbi, of course, all of the rate sensitives, the crude sensitives will be in focus today, but take us through the news flow that came through as well on stocks post-market close.
Hi, Pavitra. So first one on my list is PB Fintech. Now, sources say SoftBank may sell 2.5% stake in the company, and this stake sale will happen at a discount of 0 to 2% range from yesterday's closing price. Bajaj Finance, they get board approval to raise 8,800 crores via QIP. Additionally, the company is going to issue warrants to Bajaj Finserv to raise another 1,200 crores. Tata Motors, the JLR wholesale numbers are in, and that were up 29% on a year-on-year basis. And also JLR expects a positive free cash flow of £300 million in Q2 FY24. Adani Wilmar, the Q2 business update, the standalone business was down 13% on a year-on-year basis, but the volumes were up 11% on a year-on-year basis. Godrej Consumer also came out with their Q2 business update. The consolidated volume growth is seen in mid-single digits, but and also saw double-digit revenue growth. The company saw healthy expansion in their EBITDA margins across key segments. Ujjivan Small Finance Bank, the total deposits were up 43%. CASA was up 27% on a year-on-year basis. Utkarsh Small Finance Bank gross loan portfolio was up 26%, and the total deposits were up 19%. And lastly, Som Distilleries, the company is going to do a fundraise via QIP on October 10th.
Okay, Surbi, thanks a lot for running us through that entire list of stocks. We're going to watch for all of these in today's trading session. Finally, it's over to Nigel, who's looking at all of the cues from the futures and options space. Nigel, looks like the start will be positive, but take us to what you're tracking.
Well, that's right, morning, Pavitra. The start is likely to be positive, and yesterday we had a good session, actually, but the key resistance levels remain elusive. The markets couldn't get past those levels. But yesterday, as we pointed out at the start of the day, that the FIs, the net short on the Nifty Bank in particular. It appears yesterday, at least on the whole, there was some short covering that was seen because the Nifty Bank ended higher and the open interest was lower. And that perfectly ties in what the FIs did. So there was my long addition. That's after a while that we're seeing any kind of long addition out there. While the first signs of some bit of short covering, marginal, 2,000 contracts lower, they continue to remain net short on this index with close to around 74% of their positions on the short side. And in terms of index futures positioning, well, the absolute numbers are around 88,000 contracts. How did the options data stack up? Well, the 19,500 put, that was fairly active in yesterday's trading session, and the 19,600 call as well was fairly active. The premium on both those two strikes were around 75 to around 80 rupees. So for those that are writing the 19,500 put, you minus 80 rupees, you get 19,420. That'll become the important support zone. If you break that, then you're looking at 19,330, which is the low we saw earlier this week. On the upside, though, 19,610, 19,670, that's going to be a bit of a resistance zone. The Nifty bank, that's going to be in focus. We'll be waiting to hear from the RBI governor. But positioning is such that we don't get way past that 44,600 odd mark. So that's going to be a bit of a resistance zone in the near term. The GIFT 50 suggesting a green start. The bulls will be hoping not to see a very hawkish RBI governor, and later this evening, maybe a softer jobs data. That's what the bulls will want, but let's see what they get. Back to you.
All right, let's see what they get. Nigel, thanks a lot for taking us through all of those cues. Let's get into a short break now. But on the other side, we're going to talk about exactly this cue. The RBI will announce its policy decision in just over 2 hours from now. So we're going to line up all of the expectations when we come back. Welcome back. You're still tuned into Power Breakfast. Now, like we've been pointing out, the Reserve Bank will announce its policy decision in just a few hours from now, and all respondents to a CNBC TV18 poll expect a status quo policy. In fact, what is really crucial to track this time around is the central bank's inflation forecast. So Ritu is here to take us through what we can expect this time. Ritu, take us through, what is expected and what is our poll throwing up?
The Reserve Bank's Monetary Policy Committee is widely expected to keep rates on hold for the fourth consecutive time and strike a hawkish tone with the recent volatility in global crude prices and global central banks setting up for a longish pause. 100% of the respondents to our poll expect a status quo policy this time around. No rate hikes are expected in the entire financial year, and a rate cut could be pushed to the next financial year, with 40% expecting it in the first quarter and another 30% in the second quarter. But really, this is going to depend on how inflation pans out. Now, the MPC is also expected to leave the policy stance unchanged at withdrawal of accommodation, because the last tranche of that 50,000 crores impounded by RBI with the incremental CRR returns to the system in October. Half of our respondents expect the RBI to revise the consumer inflation projection upwards marginally, while the other half expect it to be left unchanged at 5.4%. The GDP forecast is also unlikely to be tinkered with in this policy. And now, anything said on liquidity is going to be very closely watched. We asked our respondents where they see the interbank call rate for the rest of the year, and a large majority sees it at 6.5 to 6.75%, which is a tad above the repo rate. This is because dealers say with the US yields giving a near 5% risk-free return, RBI will have to keep short-term rates higher to attract dollar inflows and prevent any speculative outflows. And lastly, the tone of the policy is likely to be quite hawkish, as macroeconomic developments, especially on the global front, will leave little room for RBI to sound dovish. So to sum all of this up, while there's unlikely to be any major action on rates, the commentary is what the markets will watch out for, and more importantly, the inflation projection from the biannual monetary policy report will give an indication of just how far away we are from any hopes of a rate cut.
All right, Ritu, thanks a lot for laying out all of those expectations and the highlights from that poll. Just around 2 hours to go for that big decision from the Reserve Bank. But with that, let's move on and talk about the other important news for India, which is that crude oil prices continue to fall. Manisha is here to bring us an update. Manisha, now around $84.
Oh, well, absolutely. The kind of run-up that we saw is exactly the kind of decline that we're looking at in crude oil prices. So after 5% fall day before, we've seen 2% decline overnight. So with that, for this week now, the crude oil prices are down by 12%. We are trading at a 5-week low. This is about profit-taking coming in from funds, surge in gasoline stocks, firm US dollar, all of that weighing onto the crude oil prices. And apart from that, it is the global oil output that could also increase. The statements coming in also are weighing on. But the markets will keep a keen eye on the U.S. non-farm payroll data that comes in today for further direction. Decline is what we have seen also come in for the metal prices. So copper is trading at a 4-month low. You have sharp declines come in For lead, nickel, zinc, all of these commodities fell anywhere between 1 to 2.5% overnight as well.
Okay, Manisha, thanks a lot for taking us through all of that action from the commodity markets. With that, it is time for a short break, but there's lots more updates that we're tracking on the other side, so stay with us. Welcome back. Let's now track some important news developments from across the country. And here's the latest on the Sikkim flood crisis. At least 18 have been killed and more than 100 are still missing after a flash flood hit Sikkim on Wednesday. In fact, at least 20,000 people and over 3,000 tourists are said to be stranded in different parts of the state as well. So search and rescue operations are being carried out by the Indian Army and the Trishakti Corps. All government and private schools and colleges have also, been asked to remain shut until the 15th of October because the IMD has predicted heavy rainfall in the state for the next 24 hours. So those are visuals of the rescue operations. We'll keep bringing you updates on this front as well. But in some more somber news coming in early this morning, a fire broke out at a 5-story building in western Mumbai's Goregaon area, leaving people stranded on multiple floors. 6 people have lost their lives while over 30 people have been rescued. Officials say that 2 others remain in a very critical condition as of now, and the blaze was put out by around 7 a.m. this morning as well. So that is some news coming out from Mumbai as well. With that, let's move on and talk about the Cricket World Cup because New Zealand comprehensively defeated defending world champions England in the opening match of the 2023 World Cup. Batting first, England set a total of 282 runs from their quota of 50 overs. The Black Caps, however, took apart the English bowlers to chase down the 283-run target in only 36.2 overs, helped by centuries from both Devon Conway as well as Rachin Ravindra. Now, in today's fixtures, we have Pakistan, which gets their campaign underway against the Netherlands. That match starts at 2 p.m. this afternoon. So I'm sure all of the cricket fans will be tuning in for that one. But with that, we're completely out of time on this edition of Power Breakfast. We leave you with the news that the Asian markets are very quiet. There's not too much happening. Seng, of course, is doing well. Nikkei trading around 0.25% in the red. And the gift Nifty implies that the start for our own markets could be around 30 points in the green. Thanks for tuning in. We have Bazaar up in 2.